Welcome everyone to the Value Investing 2K channel. Today, we're going to analyze an extremely interesting stock with the ticker symbol CLS. This company primarily offers high-tech solutions based on connectivity and cloud services. Celestica provides a broad range of solutions including supply chain management, design, development, new product introduction, engineering services, and component solutions. Let's take a brief look at its performance over the last 5 years. We will also review companies operating in the same sector to check if Celestica has any competitive advantages or not. From a revenue perspective, you can see that over the last 5 years, Celestica has consistently achieved increasing revenues, which certainly draw the attention of many investors. Now let's start a more detailed analysis of the price trend. On this page, I will show a 1-year chart, which displays a predominantly upward trend. As you all know, the index in which it is listed has also trended upward over the last year. This has undoubtedly contributed to the stock's appreciation, but we will see that it has a performance, when compared with the trend of the benchmark S&P 500, which is certainly noteworthy. Let's now check out the ratings associated with Celestica. Then, we can get a first idea of the clear interest in the stock. From a quantitative standpoint, as reported by Seeking Alpha, one of the tools I use for stock analysis, Celestica has been given a strong buy rating with a score of 4.97 out of 5. This rating is based on several key factors including growth potential and profitability, where Celestica scores high with ratings of B and B, respectively. Now, let's delve deeper into some fundamental metrics crucial for our value investing approach. First, the enterprise value to EBITDA ratio. For Celestica, this stands impressively at just above 10, which is well below the industry's desirable maximum of 30, suggesting a potentially undervalued status. Comparing it to its peers like Fabrinet, IPG Photonics Corporation, Sanmina Corporation, Plexus Corporation, and TTM Technologies Inc., Celestica holds a strong competitive position. It has a market capitalization of $5.33 billion, placing it second within our selected group. Regarding the market cap, I'd like to draw your attention to the fact that for us, companies that have a market cap higher than $350 million are considered sufficiently robust for inclusion in major American indices like the S&P 500. Regarding the main metrics, I generally base my analysis on some metrics that are very important from the standpoint of value investing. You can find references to this also into many books. A key metric is the enterprise value divided by EBITDA, which should be less than 30 to be considered acceptable from a performance perspective. This ratio compares the value of a company, including debt and cash, with its earnings excluding interest, taxes, depreciation, and amortization. This metric is useful for evaluating companies with different capital structures and is often used for valuation estimates and comparisons between companies in the same sector. Consider that a low value might suggest that a company is undervalued relative to its current value. So, it is definitely a very interesting metric to consider in the overall judgment. Now let's fully verify it with the same relative to all other competitor companies. As you can see, Celestica places itself at a good level with a value of this metric slightly above 10. Clearly for us, the reference threshold is below 30. I must say that all companies report excellent metrics, but Celestica really places itself at an excellent level. Now, let's focus on another very important metric for us, the price divided by earnings. Generally, for this metric, I consider values between 0 and 10 to be good, but it depends on the stock and the sector. I don't have corresponding values for other stocks as the Seeking Alpha platform does not report the price-earnings ratio directly. However, I downloaded data from the Finance platform for Celestica and I can say that this value stands at around 20. You can do your checks, your due diligence, and verify this as a high value compared to the optimal parameters, but this metric should not be considered in isolation, but should be considered in a broader context. Thus, even though this value is not optimal from a decision-making perspective, further analysis is needed to draw our conclusions. As for the price-to-book ratio, let's verify the comparison. We see that the value of Celestica stands at around 3. Compared to other stocks, it is definitely a slightly higher value. While an optimal value should be between 0 and 2, I would say that it is not a bad value moreover if compared to her competitors. Remember, this metric is defined as the ratio of a stock's market price to its book value per share. Just to add a detail about this metric, a low price-to-book ratio may indicate that the stock is undervalued, although it must clearly be considered in relation to specific sector factors and the company's situation. Let's not forget this. Now let's do a check on the gross profit margin. Let's make a comparison on the gross profit margin, and from this, we can see that Celestica stands slightly above 10%, which is an excellent gross profit margin value, where I recall that this metric indicates the percentage of revenue that remains after subtracting direct production costs. A value around 12% is quite low. It is a good value that I would consider. It is slightly below the standard, so as far as I am concerned, Celestica still has an acceptable gross profit margin, which also must be placed within a broader context. Now, let's verify the return on total assets. Regarding the return on total assets, I can definitely say that it indicates how effectively a company uses its assets to generate profit. Higher percentages obviously indicate greater efficiency in asset management. A value of 5.63% is definitely not higher than the 10% threshold I consider to be good, but it is not a value to be discarded if it is compared with others. As you can see, it still ranks in a medium to high zone compared to the stocks within its sector, so it must always be contextualized with its main competitors. Now let's check the return on equity. I would compare it with the competitors. The return on equity measures a company's profitability relative to its own capital. A high rate suggests that the company is generating significant profits from the funds that investors have invested. Obviously, let's compare it with its competitors. We can already see that it reports the best results. As far as I am concerned, I consider excellent values to be below 10%, so having a value almost equal to 20% is really a remarkable value for which Celestica is doing really well. Let's also take a look at the debt situation. This is a very important parameter. To verify the debt situation, I always check the value of debt to equity. Given that the threshold for me must be less than 70%, let's check the value reported by Celestica that stands at a value of 48.65, which is clearly an excellent value because it is below the threshold. Moreover, it is not even the highest value among those of its companions. This is an excellent result. Now let's check the profit margin. Attention, the profit margin is the net profit margin and shows what percentage of revenue remains as profit after all costs, including taxes and interest. This for me is a key indicator of the overall financial health and operational efficiency of a company. Let's verify on Seeking Alpha. This value stands around 10%, where the threshold I consider as good is 10% or higher. For this reason, in my opinion, this is an excellent result. Let's check the last metric we take into consideration, which is the operating margin. The operating margin measures the operating income derived from the company's main operations as a percentage of total revenue. This provides insight into the effectiveness with which the company is managed compared to its peers. The profit margin for Celestica is 44%. The threshold values of the operating margin must be greater than or equal to 20. In this case, it stands at a value of 44%. I would say that it is an excellent result. Though fundamental analysis indicators are not matched in full, comparing Celestica with its peers makes it a stock that I would always like to have in the portfolio if it is balanced with stocks of other sectors and regions. Celestica for me, and this is obviously a strictly personal opinion, also returning a little to what the one-year chart trend is, market permitting, launched towards $50 per share, almost plus 10% from current valuation, which would allow it to reach the medium-term maximum. In conclusion, I report that Celestica has a high consensus on projected earnings per share. Annualized at a year-on-year of plus 37% with a revenue of plus 15% as far as today's goal is concerned, this is a stock that I would definitely give very high consideration in the context of a larger portfolio. If you have questions, you have dissenting opinions, or you have requests regarding deeper analysis on the stock, let me know in the comments. I have a long position on Celestica within a portfolio of about 23 to 25 titles right now. Thank you for your great patience to have listened to this video until the end. Goodbye.